There's that Akshay Kumar's thing. No, he does. Hey,
Mm.
how does it do it? Hey,
Yeah, so we are live, I guess.
are we? How does Akshay Kumar do that? Like, hey, hey. I want to fucking look that shit up. Wait, hold up, hold up, hold up, hold up. Do you know what I'm talking about?
Yep.
Do it.
No,
Why not?
because I have tried it a lot of times and I have failed miserably.
Why? Okay, let me try. Hey,
No,
hey. How
still
does it
no.
do it? Let me see.
Bro, you do realize we are live.
Yeah, I know, I know.
Hello, people.
I'm gonna
How are
check
you
this
today?
shit.
Hello. What is up? How are you, Abhinav?
Uh, What's up? Hello, hello. Today uh we are back. Day I don't know. Hey, by the way, on a side note, guys, can you start putting the day 1, 2, 3, 4? Like even though you're doing the title, try to have like a day, like in the end, you just put like day 1, day 2, day 3, day 4, because like that kind of gives a sequence to things. Like even though it like you can do like structure day 1 and structure day 2, whatever, and like day 1, 2, 3 kind of goes as a sequence as what they can kind of see. But on the side note, how are you feeling, Shawaaf? How are you doing?
I'm good. I'm good. How are you? I'm
I'm
exhausted.
I'm actually crying a little bit. That's the reason I'm wearing the glasses. Because Dunzo is being a piece of shit. Fuck
What
Dunzo.
happened?
Fuck Dunzo. Please allow us. Okay, so this is what I'm reading it out. Okay. Sorry to keep you waiting for a while. We are continuously trying contact. I fucking hate these automated messages. Connect with him. We take such instances very seriously. We have tagged the partner and would be taking strict action for the concerns. You have kindly confirmed that we can rerun the order without any extra cost or refund. Fund for the same.
Yeah. So what's the scene
Refund,
now?
please. Location. And they're sending it. Okay, they're giving me a refund. So I'm like, okay. Or change the location. No, actually, I'm just going to give them one option. Otherwise, they'll fucking irritate me. But anyway, how you guys doing? How you guys doing? Chat. How is the chat doing? Um, can you just pull up the chat, bro? Okay, so that we can kind of
Sad, see the
read.
private chat.
We got one copyright claim because that's fine, bro. For the music we play, fuck you, dude.
Stop. Stop with it.
Oh, but what's the copyright claim? What does it say, by the way, guys? I want to know. When will we have practical classes? I don't know, man. I don't know. Shawaf has decided that he's just going to bore us with fucking lectures and not allow us to actually trade. So
If you got a
whenever it
trade, you
happens,
got to go through the boring lectures as well. So
a kid basically sent me yesterday uh like what we are teaching, basically another person doing something the same way in the west somewhere, and like the bunch of like all like there's about 500, 600 episodes or such on YouTube, and I was like, oh, this is nice. This is nice. It's already been done before. Why the fuck are we taking that effort? But anyway, you got to do what you got to do, right? But shifting from the nonsense to
thanks, bro.
the seriousness,
And I like boring you people as well. So
uh, we
Sad,
are
you
going
want
to
the same energy
start.
every day.
My book is ready. My pen is
Okay, so
ready.
start with the recap, Sad.
Okay, you want me to do the recap? Let me go. Recap till now or just yesterday's?
Yesterday's.
Yesterday's hammer ho gaya. Okay, so yesterday we studied demand zone and supply zone. Basically, we do not do. We demand zone is uh, the the red candle before the impulsive green candle, and whatever that red candle becomes the demand zone. The demand zone base size is basically the top to bottom of the red candle. Supply zone is when there is a downtrend and the last green candle, and the size of it becomes the SL size. Long position, uptrend, short position, downtrend. Short is basically selling, long is buying. Stop loss, our stop loss is at 1%. That is, if we have a capital of say about 100 rupees, 1 rupee should be our stop loss, and we should not take more risk more than 1%. We also learned the stop loss formula, that is risk by SL size. Risk is basically the
Can have
uh,
practical classes from Shawaaf.
sorry.
No, no, no. I'm just reading the comments. You go
Okay, so
on.
the risk is basically the risk is the 1% that you're ready to actually risk of your investment, and the SL size is basically what I basically told you. There's the previous red or the green candle, and divide. So risk divided by SL size gives you the number of stocks that you should be able to buy. You shouldn't buy more or less than the stocks that the formula is giving you. We also learned about tap or mitigation. Tap or mitigation basically means when, uh, say, you are having, say, this is your supply zone, and if it enters the area, if your graph enters the
That's a
area,
demand zone. If it comes from the top, it's a demand zone. When it
हाँ
goes
हाँ
from
so
the
you
bottom
want
to
to
the top, it's a supply
हाँ हाँ
zone.
ठीक है whatever no no, same thing.
It's not whatever. That
हाँ
makes a
man,
difference.
you understood. No.
No, I didn't.
Demand zone, when it enters the demand zone, not just the top, but when it enters the zone area
I know
of it.
if it touches or taps or enters, it's called a
Hmm,
mitigation.
mitigation. That's what I learned yesterday.
Shrikant, say hi to Sad. Come here, dude.
Did you change your setup somehow?
Yeah, you remember the corner of the room which I
Oh,
had made in my garden?
you finally did it.
Yeah, I moved my garden to the room, and
Show me, show me.
how am I supposed to show you now? I'll have to walk around with the laptop, dude.
It's like
I'll show it to you later. I'll send the
okay,
photos.
cool.
Yeah.
Mother chode, bro. Fuck. Dunzo piece of shit. Fuck you, Dunzo. Fuck you.
God, Saj,
Who
stop
will
with
wait
it.
for 5 to 7 days, 7 business days for a fucking refund? You guys are
That's
ludicrous.
the that's the
You
normal
will
policy, Saj.
fail. Dunzo, you will
3 to
fucking
7 days.
fail.
3 to 7 days is the
No,
normal policy.
no. 5 to 7 days.
Some take three to
No,
five days as well.
no. Swiggy takes 2 hours.
Yeah. Oh, sorry, I forgot
Dunzo
about
will
that.
fucking fail. Mark my words. If they do not change the way
God,
they
come
operate, they
on,
will
man.
fucking fail.
Get over it.
Okay, let's go. Yeah, let's go.
और गाली देना है या हो गया?
No, no, I'm good. I'm good. I'm good.
100% sure.
Yeah. Okay.
Sure, no?
Hmm.
Cool. Then yeah, you were at the demand zone.
Mitigation. They
Then
entered my mitigation area. And like, fucking. Okay,
hmm.
go. What are we learning
Okay, so
today?
uh, okay, so now we'll be continuing more with demand and supply zones because it's a pretty wide top. There's a lot to learn in that. So it'll take us a few more days to get done with it, and we'll be learning about it in detail.
Hmm.
Okay, so moving to that. Give me a minute.
I'm waiting for you, bro.
Yeah, bro. Just a minute. Is my screen visible?
Nope. Oh, now it
No.
is. Brilliant.
Okay, good. Let's go to. Okay, so yesterday we have learned what demand and supply zones are. You have understood how do you mark a supply zone?
Yes.
Okay, so we'll do some examples then.
Yeah, yeah. So supply zone is, to give a quick reminder, a supply zone.
Yeah, first we'll
Uh,
go through how, like how I told you, we'll mark the supply zone yesterday.
Supply
Then we
zone is when there is a let me do this. Supply zone is when there is an impulsive downtrend where there is a
not just a
low that is
downtrend when the market is moving towards any downward direction anytime.
downward direction. When the
Yeah.
low is broken, the last green candle becomes your supply zone.
Not
Correct?
Yep. Why? Just give me a minute. Mm, okay, let's go to. Okay, so Sad,
Mm.
how will you identify the trends over here, and where will be your supply zone in
There'll be
this
multiple. Oh, also you can have multiple supply zones and multiple demand zones
yeah, okay, in this area.
in this area. Uh, okay, so how do I fucking point? Can you do one thing? Can you give me a Zoom link and then I can kind of put a pointer to point things?
Okay, so let's say this first.
That
Wait,
would be a demand zone.
no, I'm asking supply zones over here. Okay,
Supply
so
zone will be up,
yeah,
up, up, up.
this one, or this one,
That one, last one.
or this one. Camps
No, no,
showing some wrong ones
previous.
as well. So tell me.
No, no,
Hmm?
previous one, previous one.
This this one.
Yeah, 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 yeah.
Okay, so here this will be the last move, up move before the down move.
Yeah, that's
That
your
means that
supply zone.
yeah, when we entered this area, there had been some buying happening before the push down. All right. So that means that before the sellers took over in charge of the market, buyers tried pushing the market up. But at the same time, there were some sort of mitigations of the previous place. If you can see here, there was another supply zone that was over here.
Yep, yep,
Okay,
yep.
previously. Okay, that was mitigated once. Okay, if you mark this as your supply zone, that was mitigated here once, the first time.
Nice,
Okay, we
nice.
came,
But then
we
it kept at it.
yeah, we went back to that. We mitigated deeper, and then we went to the downward direction.
Mm.
Okay, so here what exactly happens is the financial institutions or the banks, they what they how do we pick the right stock to trade? Are we getting on it in the future, since you already told we will start the equity market? Yeah, we'll definitely be getting onto that in the upcoming days, but we'll get there gradually. We'll understand how to exactly read the markets first, how will we plot our things, what we need, like demand zones, supply zones. Then we'll get into all those stuff in, I think, in a week or so, or it might take a little longer.
Can you, Ajinkya, guys, can you give us a Gmeet or link, something that I can enter, uh, so that we can also come in? I can come in from Zoom and I can kind of have like a marker that I can put, so I don't have to kind of always be dependent here. Then
Okay.
Shawaf can be a singular this side, and I will have one Choto face on the other side. Go ahead, Shawaf.
Okay. So what happens is the market. Let's go to the whiteboard. if this is going to be a supply zone,
Mm.
and say the market has been moving up,
Mm.
right?
It's mitigated.
Yeah, and all these areas, what it does is there are people constantly buying and selling at every specific point.
Oh,
Okay, there are people buying here, there are people again shorting the markets, there are people longing the markets. At every move, you can see the orders being placed with for every specific price point.
correct.
Okay, for example, if there is a order, this is 100 and say this is 105,
Mm.
you can see orders at 101, 101.2, 101.23, 101.76. Get
Mm.
it? So all these price points, there are financial institutions and people who are constantly buying it.
Mm.
Okay, and at the same time, the people who buy here, they will have their stop losses over here.
Mm.
Those who sell here, their stop losses will be here. Again, those who buy here, there'll be stop losses, right? So on the push up, these stop losses are being taken out. And this move is caused by the banks to kick out retail traders and accumulate their orders and their money into their pockets. So basically,
So
what I'm
basically, in order for someone to make money, another person has to lose money.
exactly.
So in order
Okay,
for the banks to make money, stupid retailers need to lose money.
just a minute. Okay. Yeah, so see what in the market, if so somebody has to lose, if somebody has to gain. Okay.
Mm.
So what happens here is these people who are buying here, they have their stop losses here. And this entire market reaches itself in the first place so that they can make the money.
Is it me? Am I not working? Chat. Chat. Am I stuck or is it Shawaaf?
Am I audible? What happened?
I was so confused because normally my internet is shit, right? So I'm like, there is a very high possibility my camera, it's not, I'm stuck somewhere. But then I found out you are stuck, so I'm just like whispering in
Yeah,
the.
bro. Since the last couple of days, there's some serious problems with the Wi-Fi. I don't know what the problem is. Okay, so getting back. So all these moves are caused by the financial institutions itself in the first place, so they can kick out people who have their stop losses here.
Mm.
Okay. So what they do is first they create this up move.
Mm.
Okay. When the market hits here, this is where they actually wanting to be shorting the markets from, where they want the actual moves to be caused, like the big moves to come, so that they can make the big money.
Mm.
So in order for that to happen, what they do is they first push the market to this direction, to the top, to the supply zone, so that there are people constantly buying here, thinking it's still moving up to the upward direction.
Mm.
Okay, when the market reaches this point, what finance, suppose say when they make this push up, okay, and they reach here, what they do is all the stop losses over here is taken out, right?
Mm.
Because people have the stop losses over here. When the market moves up, it's taken out. When the market moves up, it's taken out.
Mm.
So once we reach this point where the banks want to actually short the market from, what they do is they just push the market down first. Okay,
Mm.
taking out all the stop losses over here and breaking the structure.
Mm.
Then this is where we create a supply zone. Okay, suppose say here we create a green candle, then a huge red candle.
Mm.
So this area. Wait. So if this is our red candle,
I'm so
this is
sorry.
going to be
Hello?
yeah.
नहीं.
Mute, Saad, mute.
Sorry. Go ahead.
Okay, so this becomes a supply zone, right?
Hmm.
So what the composite man or the institutions do it is they push the market down again. They create the short positions from the supply zone again. Okay. So which initially they had shorted the market from here. When we start going down, their positions start become the positions start becoming lower and lower. That is, suppose say from here to here, if they were in a profit of say 200 crores, okay, the market starts pushing down, their profits are reducing over here. So what they do is they let it run more. They push the market more down till a point where the structure is broken here initially from where they have started the market from. So at this point, their positive positions become to negative.
Hmm.
Okay. Then what they do is, in order to close this position, they have to take the position back to where it was over here. Okay. So either sometimes what they do is from here they push the market back up till here, mitigate the supply zone, fill in whatever they have to. Like if this is the supply zone, they have orders placed everywhere. Like suppose hey, this is 100 and 105, 100 and 105. They have placed order at every point, like 100.1, 100.35 to 100.2, 100.4. They have orders placed everywhere in this area.
Hmm.
Okay. So sometimes what they do is they get it back, they hit it to the supply zone, mitigate their orders. That is, they take in all their remaining orders and push the market down. When they start pushing it down, what they do is somewhere in the middle, they will book their this position. They'll exit their initial position that they had pushed it up so that they can cause the main down move.
Hmm.
Get it?
Got it.
So when they push this market, I mean, so when they start pushing it down from here, they'll close this position in order to exit with break even. Like break even is no profit, no loss, or with the minimum profit or whatever they want.
But when they're
And
going up, aren't they making money?
when they're going up here again, they are making money, but they're making the up move just so that they can push the market even more down. That is their
But isn't it equal? Like if you're going up one, you make one. If you're going down one, you make one.
yeah, but they don't trade like us. They don't buy here and just sell here. We
Then?
trade like that. We are retail traders. We trade like that. Banks, institutions, they have their orders placed at every point in every direction. They are at some points they are the reasons every move. Not at some points, most of the times they are the reason each move is caused. If the market see if here, where did that go? So you see, when they created this supply zone and broke the structure over here, okay, Suppose say they broke the structure over here. Create, this is the last supply. This was the supply zone. This was the last up move before the down move, right?
If they know we are watching the supply zone and all of that, why will they want to maintain that supply zone? Why not break the supply zone?
It's on them. See, they usually most of the traders are not watching. I'm really sorry, guys. Shawaaf, say something. What say? Shall we continue without Sadhna? Where is he? Ajinkya, can you check with Sad? Okay, so if this is our supply zone, oh, what a
Hmm.
timing! I was just about to continue without you.
Hmm. Good.
Okay, so if this is the supply zone, okay, so I forgot. Your question was if they know if you're looking out at supply and demand zones, why are they doing it, right?
Uh,
So most of the traders are trading with a different concept. Okay, that they trade with trend lines, they trade with support and resistance. We don't trade like that. We trade what our trading technique is called as smart money concepts. As-
mm.
Okay. So what we are learning is smart money concepts. So when we are learning in smart money concepts, our trading style, our trading setups are totally different. We are trading with the banks. We are trading along with them. How they are taking their, or when we are trading, when we are taking orders, when they are taking their orders. So if banks and all, they leave footprints behind when they take orders. That is what we call as supply zones, demand zones, order blocks. Okay, so these are the different things what banks and all leave. There's like a footprint that they leave behind, so that we make the use of it and make money for ourselves.
They do it purposely.
They don't do it purposely. That are the kind of moves they have to do it in order to take the market towards one direction. And yeah, in a way, you can say they're doing it purposely as well, because those are the things that they need. Supply zones. If we are a supply zone is the last green candle, right? So if this
Mm.
is our supply zone, the market is going down. When the market is coming back up again, we are not blindly taking, like say, we are not blindly looking at the market to go down from here. We'll be learning that in the later classes. There'll be different sort of confirmation. That is when Wyckoff comes into the picture. So all those things comes later. Okay, we'll learn a little more in detail with that. So when they create a supply zone, they want the market to come back to the supply zone, because when you place orders, okay, so when they place orders, they don't place like us at one go, or sometimes in two halves and all that. They have multiple orders because they are trading with, say, 500 crores, 1000 crores, 800 crores, 200 crores, and all that. And they can't take single orders. Okay. And even when you're, suppose for example, say you're trading in Indian market and you're trading in Nifty 50. Okay, so the maximum quantity you can take is 1800. So if you have to take more than 1800 quantity, you have to take multiple positions like 1800. You have to punch in multiple orders.
Mm.
Okay, for them, because see, for them itself, it might take a lot, because I myself have to punch 3 or 4 times sometimes if I'm taking huge positions.
What does punch mean?
Punch means executing your orders, basically
Okay.
how you place your orders.
Okay.
Okay, so after 1800 quantity, that is the max you can, max or order limit you can take at one go. If you need to
Okay.
take more than 1800, you have to place another 1800 order, another 1800. So those people will have multiple orders at specific price points,
Mm.
and not all of them, not all the orders get executed at one go when the market goes up. So when the market comes down from there, what they do is they themselves cause an up move back to that place. Okay, they create this up move, a buy orders, to push the market back to where it was, so that they can fill in other orders as well. Okay, what the remaining orders are. At the same time, the people who have their stop losses over here, everywhere, their stop losses are hit. That means they're losing money, they're out of their trades. So all that gets converted to what banks want. So when they're kicked out of the trade, basically that positions what they were in are open in the market right now. So banks use it to their advantage to get in their orders. Get it? So all the
Mm.
people who have their stop losses hit, that becomes this banks, or all these are now banks orders to fill in. They fill in these orders, then they start pushing market down towards the actual direction that they wanted to. That is, say they wanted to push the market down. So when pushing the market down, what they do is, at when the market reaches this point, so from here till here, when they pushed it up, they were in a profit. But this
Mm.
move was caused just so that the market comes back to the supply zone and they can push the market down back.
And this time they will do break their own structure again.
Yeah, they push the market down again. What positions that they had created here, they exited here. And the positions that they had built here, taking out stop losses from everybody over here, from that they are making the actual money towards the market going down.
Mm. Got
Got
it.
it?
Got it.
What did I just say?
So banks create artificial supply demands, and if they have multiple
They
points
don't
of
create
entry, but
artificial
in order
supply
for
and demand. They create artificial moves
they
to.
create artificial moves, but they don't make money till they have removed everybody's. Basically, they need to remove retail investor stop losses so that they can make money, so that the market opens up.
Yeah. So what they do is they place their orders where retail traders have their stop losses set.
Hmm.
Okay. We we are going to learn to trade like that. That is how I trade. I usually have
Hmm.
my stop losses where most of the people are trying to be kicked out of the market. I mean, I enter the trade there. Sorry, my bad. I enter the trade where most of the people get kicked out of the market. That is how we can benefit from smart money concept. Okay, not, it doesn't always work out, but it works out most of the time. But even when you're losing the money, say you're losing the money in a specific trade, you're not losing a lot, you're losing very little compared to what you'll make when you actually make. So how much you're risking to what your reward is, that is called risk to reward ratio. That is a separate thing, that is called risk to reward ratio. Risk to reward ratio
Hmm.
is basically how much you're willing to risk to how, for how much what you're making.
Hmm.
Normally people trade 1:1 or 1:2. That is most of the 1:3. For some people 1:3 is really good as well. That is basically for every 1 rupee you're risking, you're making 3 rupees.
So
We are going to,
basically,
yeah, but we are not going to take trades less than 1:5, 1:6. That is, for every 1 rupee we may lose, risk, we are at least planning to target 5 rupees of
So
profit, 6 rupees of
if your
profit.
stop loss is at 1 rupee, you should be able to at least make 5 rupees.
Exactly. Not exactly. Yeah. Yeah. Right. Suppose, see, I'll show you. I'll show you an example as well. Where is the See, this was the last trade. This was the trade which I took yesterday. Have you seen? I hope you have seen the news and all that, saying that the Sensex crashed in the last 1 hour, half an hour of the market and all that shit.
I have no idea.
Okay, so what happened was market fell pretty bad. You can see that.
Mm.
Okay, so here I had taken this trade. So in this point, you see this red area.
Uh,
This is what I was risking, and this is what I made. This entire gray area is what I made. Basically, in this trade, I risked, say I risked $1 to make $14.
you were telling it's gonna come below 17,000, no?
Yeah,
On the first day also
and
you
it
told the market's gonna come under
yeah
17,000.
it went till 16,800 yesterday.
Mm.
I was trying.
Prediction
Yeah,
alert.
and that's why I told you I was short on the markets. I was short. Actually, I caught this entire move till here as well, and then today
So how much money you
morning,
make?
that I'm not saying. So let's move on.
Now, what is your risk to reward ratio?
I can't say that, dude. My risk to reward ratio here is 1:14.
1:14. So for $1 you would have lost, $14 you would have made. So
Yeah,
assuming you put in 1 lakh, you made 14 lakhs.
yeah.
So if you bought a trade at 1 lakh,
Not a trade. If I risked 1 lakh, I would have made 14 lakhs. And and in this trade, I had taken multiple trades in this, and I have made some crazy returns. In just in one of the trades, I made around 400%. Abhishek. Yeah,
man, this sucks.
yeah. Go cry now. Okay,
Why
so
didn't you
coming back.
tell me?
Huh?
Why didn't you tell me?
Tell you what?
I would have sent some money, no?
Eh, I've been telling you since how many months I've been telling you I'm short on the markets. Markets are going down. Markets are going down, and I myself, my money is on short. What more you want me to tell? Hmm. What more you want me to tell you?
I feel sad.
It's your fault that you didn't give the money, not mine. I did my bit. That's not that's a you problem.
That is a me problem. Go
Yeah.
ahead. No, like when
Okay.
you
So
have like these things coming up, you should call me immediately. Be like, bro, it's dipping. Send money right now.
yeah, you say every time I call you, I at least expect you to send 20 lakhs. Deal? Then I'm
No,
giving you a
not
call.
that. Give
If
me a
you give
second.
me a
One
deal
second.
there, if you give me a deal there, I'll give a call. Yeah, bro.
It's not. It's not how
Bro,
it
bro.
works. Not how it works. Not how it works. Give me a
Bro, you
second.
want money or not? I see. I don't mind. I am making money for myself anyway.
Okay, bye, guys. A quick Q&A. 5 minutes.
Bro, yeah, bro. What, bro? How often do you find setups in a trading day? That depends, bro. See, not every day I find these big trades, but see, I say I for multiple. I do get multiple trades though, but my some trades I scalp as well. Like I enter the trades, I take small trades. Some I take big trades. So depending on the move is how I usually trade. Today I made a loss. I took a trade over here. I made a very small loss, and then I had taken a trade at this point as well because I was expecting the market to go till this point because in 1 minute there was a demand zone, but then it went down till here. I booked it, then the rest you can see what happened. So it all depends on how we trade. When you're trading in smart money concepts, you do find multiple trade setups for the day, and there are
Who okay,
days where
who invented smart money concepts?
it has come from the banks, dude. This is how banks trade. And Wyckoff is something a guy called Richard Wyckoff has invented it. So see, smart money concept is somebody that they just labeled it because they are smart money. They are called the smart money in the banks.
Hmm.
Okay. It but can you please explain us how to use trading? Like I got touch. Yeah, bro. I'll just go there. I'll let you know. So smart banks trade this way, and banks are called the smart money because they are the ones who have the highest number of capital. Say even if I'm an individual with 15, 20, 30, 100 crores in my account, I'm still going to be a retail trader. I'm not going to be an institution.
Hmm.
Okay, so that's how they trade. That is why they are the smart money. They are the ones who are basically making every moves in the market as well. So even this is a smart money move as well because see they from here they when the market was left from here they wanted the market to go down. They created all these manipulations and all that shit. They created moves up and down. The market was moving in a direction. I have taken multiple trades here as well, small trades. Then this was the actual place where they wanted to short the market from. So when I got my enough confirmations and all, I shorted the entire move down. So,
Nice.
bro, I think actually for using Trading View, we will use one day just for learning Trading View because I don't think in like 5 minutes or 10 minutes now I can get it done with. We'll keep a class just for Trading View, sir. How to use Trading View.
Okay.
Okay. Any other questions?
Anything else left in this
More,
supply
lot
command
more,
zone?
lot more.
Can we cover it or do we stop it?
Uh, did you understand how supply zones
Yeah.
work?
Yeah.
Retail traders who are big bulls, can also make the move. See, I'll show you.
What's the question, Mama? Read question first, no?
But retail traders who are big bulls can also make the move, right? Bro, see, these are the kind of moves that maximum can happen. Okay. We are not talking about Rakesh Jhunjhunwala over here. When you mean big bull, I hope you are not talking about him as well because he's not a retail trader. He's a HNI. He's a high net worth individual. He has a lot. He has like 27, 30,000 crores in his portfolio. So he has a lot of control over the market in a way as well. So these are the kind of moves at the most, at the not even this, probably this. These moves are just banks, institutions, foreign institutions, domestic institutions. It's all the financial institutions basically. Okay, so yeah, Sad, coming to explain. Yeah,
Explain what, darling.
supply zones. Bulls can manipulate small cap shares at best. Yeah, they see not only bulls like more. If you have a huge capital, then yeah, you can manipulate small case stocks and all that. But again, there will be a lot of liquidation issues. Liquidation issues, as in you might able to put your money in, but while taking the money out, you might face issues. There'll be a lot of liquidity problems and all that. But at the same time, you don't have to. It doesn't have to be a small case stock. You guys know, I'll show you an example. You all remember when Rakesh Jhunjhunwala invested in Z Entertainment? You remember, Sad, at that time? It was all over the news as well. Okay. Yeah. So, where was that? Yeah, this was the time. See, this was how the market was moving before Rakesh Jhunjhunwala invested
Shavaf,
in Zeal. Yeah.
Shavaf, is it okay if we stop the class for today? I'm getting a
Yeah, yeah, cool,
lot of
cool, cool.
calls because there's
Yeah, yeah,
nothing going
cool.
on. You can take up like the Q and A's and post the day, do a sign out. Okay.
Yeah. Okay. Just you cut off. Give me 2 minutes. I'll just show this and I'll go off.
No, no, take your time. So whatever Q and A you can finish, उसके बाद तो
Hmm.
देख ले. I'll call you tomorrow. Okay.
Hmm. Hmm.
Bye bye.
Bye.
Like, share, subscribe, motherfuckers. Like karo, mother cho.
Okay, so see, before Rakesh Jhunjhunwala invested in Zeal, the market was moving like this. You see this move, up move. This is what happened after he invested in a matter of 2 days. And this, you can't call it a manipulation. This happens because he's a high net worth individual. A lot of money is being put in the first place. Secondly, when somebody like him buys a stock, there's a lot of hype being created. He has a lot of, say, control over the market because he's a high net worth individual. He's one of the largest trade investors in India. So when somebody like him buys it, people will eventually start buying it, and because of that, the stock prices start going more higher and higher. In a matter of, sorry, this happened in a matter of 13 days. It moved 93%, 172 rupees. It moved in 13 days, whereas normally it used to move at the most in, let's say, okay, where it used to move 23 rupees in a matter of 10 to 12 days or 15 days. It moved, say, almost 190, 200 rupees in a matter of 12 to 13 days. And that's insane. That's really insane. Yeah, manipulation of stock prices is illegal and insider trading is illegal. So yeah, but at the same time, when you have a lot of capital and put in and there's not a lot of liquidation in the stock prices at sometimes tend to just push up higher. So if I show you, I'll show you another stock. A friend of mine showed this to me. You can't see the chart. There is no chart in this stock basically. All you see is lines. But in a matter of, no, no, there was no stock manipulation in Zeal. There wasn't stock manipulation. It was just the hype caused by a HNI and the amount of money put by him as well, that the market pushed up so high. There was no manipulation in it. This is all these are see, these things are kind of risky as well. There are a lot of liquidation issues. There is no chart in this. This is a stock. It's called cell manufacturing. It's a process industry. It moved 18,000, 18,000, yeah, almost 18,000% in a matter of, how long was it? 172 days. And that is 6 months. In a matter of 6 months, it moved 18,000%. That is, if you had invested 1 lakh, you probably had 18 crores. 18 crores, I guess. And these are called insane kind of manipulations that happens in the market. So you should be very careful as well when you invest in a stock. You might sometimes you might make crazy money, but while you exit the positions, again you might face some problems. Just like when Elon showed confidence in BTC. Yeah. Can you suggest uh, can you suggest some sources from where I can learn Wyckoff? Uh, Wyckoff, to start off with, I think you can go off with MentFX. Your mouse pointer goes blurry in the 720p stream. Slight request, do something. Yeah, bro, we'll definitely do something about that. Yeah, you can't basically predict the manipulation. It's, you look at the stock, all these stocks. If you see their book value, if you see their income statement and all, it won't be so great. It'll be pretty. You see, their profit margin, their profit is at minus 5 billion. They'll Their net income is five negative 5 billion, and the stock moved 18,000%. And that's and see, if you trust all these technicals, it still shows it's a strong buy. Their financials must not be that great at all. Yeah, everything you see is in red here, negative, negative. Their total equity is in 2017 was in minus 2,100%. Okay, they have made some money as well, but 2020 it was just a downfall. So overall, they didn't make any money, but the stock prices was just booming, flying high, high and high. It went from some three one one and a 1 rupee to 1,400 rupees. Can you tell how do you decide to choose a stock to trade? Just eager to know. I decide a stock. I have a set of 200 and no 168 stocks. Of luck, if you want, I'll give you the link to it as well. So I don't trade stocks anymore. Even if I'm trading, I trade very very rarely. I usually trade Nifty and Bank Nifty. So if even if I'm trading, what I do is I have a sector list over here. I go to the changes, I see which is the best moving sector. Then whatever it is, auto, infra, IT, and all that. Then I have a section of all the different sectors in detail with the companies underneath it. Then again, I see which move the best and which has a good move and all that. Then I break it down. I go down, and then from accordingly I would trade. That is how I would trade stocks. Then we are trusting a source and going for it, right, in the case. Also waiting for BTC in 2024. Yeah, bro. Let's see. I have a lot of expectations on BTC, like a lot. Let's see how that goes. So, Aflak, I hope you am clear on the part. How do you pick up stocks? Uh, Done. So, yeah, we are done for the day. Can you? Okay, so we are done for the day, guys. We'll see you tomorrow. Even I'm actually very very exhausted today. I had a very tiring day. So we'll see you all tomorrow. So yeah, that's about it. Bye bye.